Quick hits, three things that I've seen in the news recently that I wanted to make a brief comment on. Is Canada in a technical recession? Well, the answer is maybe. We saw a negative growth for the second quarter of this year. I'll show a chart in a moment. And if we have two negative quarters of growth or GDP, technically, Canada will be in a recession. Rising cost of food, changing how Canadians eat. That's what the surveys tell us. Are Canadians spending as much money in restaurants as they once were? Are they using more coupons? Are they, shopping at discount stores more often? I think the answer is yes, because prices are just too high. And lastly, companies tone down the price hike talk. Well, companies have been getting hit pretty hard because all they keep doing is complaining about the prices and the costs and everything. We're seeing a lot more of businesses swallowing some of those costs, and let's talk about how high prices actually are. So let's go to our first topic. Is Canada in a technical recession? I think our best chart, or our only chart for this, shows it the best. And let's pull up that chart. Look at the red bars on the far right-hand side. So you have April, May, and June. You have July, August, and September. We don't know. We have July higher, August down. Looks like August offset what July made, or the growth in July we lost in August. The quarter before that, 3 red months showing us a decline in growth. What will September be? We don't know as yet. Can we skirt by again and just miss a recession? This is the question. And this is why I keep harping on the Bank of Canada needs to continue to cut interest rates. And our federal government needs to continue to look at whether they can cut taxes meaningfully, not 1%, but 10%, 15%. Let's get more money in the hands of people so they can spend it and grow this economy. So we'll have to see in the coming weeks what the numbers look like. Will GDP go down for 2 quarters in a row? Our second topic, rising costs of food is changing how Canadians eat. That's what the survey shows. Our chart for this shows the comparison between fall of 2024, the spring of 2025, and the fall of 2025. So the dark part, 48.2%, is the fall. 48.4% is they sought out more bargains or more sales and discounts. So it was about the same. Jumped up to almost 49% in the fall of 2025. We go down to the shopped at cheaper stores. Almost 25% looked for shopping at cheaper stores in the fall of 2024. Interesting enough, that actually fell off in the spring of this year and the fall of this year. So I think that is interesting. Bought fewer non-essential food items like ice cream. 22% bought less. 23% bought less the spring of this year. So I think depending on who you are as a consumer, what you like, what you dislike, what you feel is important, what you need. Some people think they need their ice cream fix, their chocolate fix, their junk food fix. Some people will just focus on the necessities. And as prices remain high, different people are going to focus on different things. But make no mistake about it, prices are a lot higher than they are a lot higher today than they were a few years ago. Our third and final quick hit talks about the companies toning down their price hiking talk. I think they just didn't want to look like they were against the consumer and going against the consumer. Our one chart on this clearly shows that in the quarter 3 of 2025, only 28 people, or 28%, talked about price hikes. Q2, 51, and Q1, 90. Unbelievable, right? 90% of businesses were talking about price hikes when they had their conference calls, or just in general when they were speaking to investors. So clearly see how companies are now trying to deal with these price hikes in a quieter way, trying to get more people in the door, maybe swallowing some of those costs a little more. That's what we tend to be seeing. Margins are obviously shrinking a little bit. But overall, I think they're just, right now, just trying to play it safe and just not talk about the price hikes, even though tariffs have continued to make it difficult for a lot of small businesses.